In 2025, the financial world has changed forever. Artificial intelligence has stepped into the spotlight, no longer just a background tool, but the driving force behind smarter, faster, and more accurate investment strategies. For decades, human advisors have guided people through the ups and downs of markets, helping them choose stocks, bonds, and funds. But today, AI-powered investing tools are not just competing with human advisors, they are outperforming them. This shift didn't happen overnight. It's the result of years of development in machine learning, big data, and predictive algorithms. Human advisors, no matter how experienced, are limited in what they can analyze. They can read company reports, follow market news, and make recommendations, but their decisions are shaped by personal experience, bias, and emotions. Artificial intelligence, on the other hand, has no such limits. It can process millions of data points in seconds, scanning global markets, interest rate changes, corporate earnings, breaking news, and even social media sentiment in real time. Imagine a human advisor spending weeks researching companies to build a portfolio. By the time the research is complete, the market may have shifted. AI doesn't face this problem. It adapts instantly, recalculating strategies the moment new information appears. This ability to analyze massive data streams and respond immediately is one of the main reasons AI is surpassing human advisors in 2025. Several powerful AI investing platforms have risen to prominence. Wealth.ai Pro is one of the leaders. It uses advanced machine learning to build highly personalized portfolios for each investor. The system constantly rebalances investments in real time, ensuring the portfolio adapts to economic changes, news events, or interest rate movements. Investors no longer need to wait for quarterly reviews or yearly checkups. The AI makes adjustments instantly. Another standout tool is QuantumVest. This platform takes things further by incorporating quantum computing. Unlike traditional systems that analyze past data, QuantumVest uses probability modeling at speeds that were unimaginable only a few years ago. It identifies opportunities in complex markets that even professional advisors avoided because of the difficulty of analysis. Then there's AlphaBot 2025, designed specifically for everyday investors. This app gives ordinary people access to the kind of insights that were once reserved for hedge funds and elite institutions. Using natural language processing, AlphaBot scans thousands of financial reports, government documents, and earnings calls in seconds. What would take a human advisor weeks or months to study is delivered to the user in real time, along with clear recommendations. NeuroTrade is another fascinating innovation. Instead of just focusing on numbers, it focuses on human behavior. It tracks global investor sentiment, analyzing patterns of fear, greed, and confidence across millions of traders. By predicting how emotions will affect the market in the short term, NeuroTrade makes moves that traditional advisors often miss. So how well do these platforms perform compared to humans? Recent studies in 2025 reveal that AI-driven portfolios consistently outperform human-managed ones. Some AI funds have beaten the S&P 500 by 8 to 12% over the past year. For investors, that difference is massive. A portfolio managed by AI can generate significantly higher returns without the delays or emotional mistakes that often hold back human advisors. Emotions are perhaps the biggest weakness of human-driven investing. When markets crash, fear leads investors to sell too soon. When stocks soar, greed makes them hold on too long. Even experienced advisors are not immune. Artificial intelligence doesn't panic and doesn't get overconfident. It follows data, patterns, and probabilities with complete discipline. This lack of emotional influence is one of the biggest advantages AI has over humans. That said, human advisors are not obsolete. They still provide something AI cannot: empathy and reassurance. During financial crises, people often need someone to talk to, someone who can explain complex events in simple terms and calm their fears. An algorithm cannot comfort you when you see your portfolio drop in value. Another major advantage of AI investing is cost. Traditional financial advisors typically charge 1 to 2% of your assets under management every year. That means if you have a portfolio worth $100,000, you might pay up to $2,000 annually just in advisory fees. AI platforms, by contrast, often charge as little as 0.25%, or sometimes just a flat monthly subscription. This makes professional-level portfolio management accessible to more people, not just the wealthy. Availability is another factor. Human advisors need sleep, weekends, and vacations. AI platforms run 24 hours a day, 7 days a week. If markets shift at 3 in the morning, the AI reacts immediately. making adjustments while most human advisors are still asleep. In a world where markets are global and events can unfold at any moment, this around-the-clock service is invaluable. But is AI investing completely safe? The answer is no. AI systems, while powerful, are not perfect. They rely heavily on historical data, and markets don't always behave the way history suggests. Unexpected events, sometimes called black swan events, can disrupt even the most advanced models. Political crises, natural disasters, or sudden global shifts can create scenarios where AI predictions fail. This is why experts recommend that investors use AI as a tool rather than giving it full control. It is still important to understand your own risk tolerance, diversify your portfolio, and remain engaged in the process. AI can amplify returns, but it can also amplify risks if used blindly. Despite these challenges, one thing is clear: AI has already transformed investing. The speed, precision, and affordability of AI-powered tools make them too powerful to ignore. Many investors are already combining AI strategies with human guidance to get the best of both worlds. The AI provides the data-driven strategies, while the human advisor provides reassurance and perspective. So what does the future hold? As technology continues to evolve, AI will likely become even more accurate. With advances in quantum computing, neural networks, and behavioral modeling, the gap between AI and human advisors will widen. But instead of completely replacing humans, AI may push them into new roles, focusing more on financial education, emotional coaching, and holistic planning rather than day-to-day portfolio management.